Now, until recently, developing countries had difficulty in attracting foreign direct investment. That's a well-documented fact. However, more than 16.4 million U.S. immigrants come from countries that are expected to experience higher economic growth than the country they're living in, currently the United States. And therein lies great potential for returns for those willing to invest in their home countries. It's an ideal combination of diaspora financing, economic transformation and profitability. Joining us now from our studios in London to discuss investment strategies for the diaspora is Eric Guichard, who's founder and CEO of Homestrings. Eric, thanks so much for your time. Firstly, we see that Homestrings is some sort of a web portal where members of the diaspora can come in, sign up and start looking for opportunities in their home countries. How does it work?
That is actually correct, Lerato. Thank you very much for having me on. Homestrings.com is in fact a web-based portal which is designed exclusively for qualified investors who are interested in looking for investment opportunities, vetted investment opportunities on the African continent. It is essentially based out of my own frustration as a member of the diaspora, my father being from Guinea, my mother being American, and also having worked at the World Bank for 6 years in trying to take advantage of the Africa growth story that I read about every day, but unfortunately not finding opportunities to actually participate. And it turns out that I wasn't the only one in that same situation. According to the World Bank, there are about 23 million diaspora members, Africans living outside of the continent, with savings of about $35 billion, much of which is in liquid form, and clearly could be used for investment and for participating in the financing of development.
Yeah. When you engage with members of the diaspora, what is it that they're looking for? Because we know that on average, something like $40 billion US comes back into sub-Saharan Africa and other emerging markets from the diaspora. But the frustration is that a lot of that money is used for consumption. It's not productive capital for investment.
Well, we actually believe that the bulk of those flows, $40 billion a year, which actually grows at about 15% per annum, that a portion of those is actually seeking investment opportunities on the continent. Unfortunately, the experience of the diaspora, the African diaspora, has been somewhat dismal. Either they are taken up by Ponzi scheme and scams, or they unfortunately have to expend a lot of money when they send funds to their families in order to invest on their behalf. And I'm sure you understand that experience. And so what we're trying to do at Homestrings is essentially provide a structured environment in which members of the diaspora can comfortably seek opportunities, have the tools to conduct due diligence on investment opportunities, and then make a decision about where they want to place their funds, whether they want to invest in healthcare, whether they want to invest in infrastructure, whether they want to invest in diaspora bonds or other types of investment opportunities.
Seems to me that Homestrings is almost like the middleman, where once Lerato signed up, you then connect her with some sort of a private equity investor, and then starting to direct my funds into a relevant sector. Tell me how that relationship works, because you've got some lucrative relationships with companies like Access, renowned banks like EcoBank, and many others who seem to be working with you.
That is correct, Lerato. What we essentially are trying to do is, in fact, empower the members of the diaspora and other qualified investors to essentially determine where they want to put their money, and in a very specific case, interact with the portal and ask for opportunities for the portal to actually seek on their behalf. And so, in one silo of investment opportunities, we are providing access to top-line private equity firms, as you mentioned, like Actis, Oreos, the Small Enterprise Assistance Fund, Summit Development Group on the banking side. And those entities have tremendous track records in terms of performance, but yet have been focusing exclusively on institutional investors. And now through Homestrings, members of the diaspora and other qualified investors now have an opportunity to participate in those double-digit returns, while at the same time being able to claim having an impact on development in their home country, their home region, or the continent as a whole. Our role, in addition addition to intermediating, is to facilitate the access to those investment opportunities, to vet those investment opportunities using industry standard due diligence tools, and then to create a social network where they can, in fact, communicate other opportunities that they would like to that they would like the portal to see.
I mean, you keep on emphasizing the fact that Homestrings facilitates as opposed to directing investment, and yet in the work that you've done, you personally, as Eric Guichard, have been celebrated for being a risk taker in terms of your investment strategy and some of the other work that you do. When you look at opportunities in Africa, where would you suggest people start thinking about bringing in their money? I know there's an emphasis here on small and medium enterprises, but which sectors should people be really thinking about?
Well, interestingly enough, it is true. I did found a boutique asset management company called Gravitas Capital about 16 years ago, and I have been managing sovereign institutional assets for the past 15 years, and then prior to that managed assets for the World Bank finance complex. In this particular case, our philosophy is to empower the qualified investor member of the diaspora to determine how they want to invest their money. And so, as you mentioned, we provide opportunities to invest in SMEs through private equity funds such as Oreos and Small Enterprise Assistance Fund. We give them opportunities to invest in commercial real estate through Actis's Real Estate Fund. Subsequently, we're going to list diaspora bonds that give access to the pipeline of investment promotion agencies of the various governments and the ability to due diligence those governments and determine whether or not they want to participate in that. To the extent that we direct investment, we provide the investment vehicles that facilitate the aggregation of the investments. But at the end of the day, you choose, Lerato, choose to determine where you're going to invest your money, whether it's in healthcare, in commercial real estate, in power, in airports, in interstate highway systems. That is your decision. Our role is to make sure that we provide you with the choice and the accessibility to those opportunities.
When you look at trends, is there a geographical bias? We know that, for instance, a country like Kenya relies heavily on diaspora remittances for foreign exchange revenues. So do you see a lot of money going to East Africa, or is it an even spread between East, Central, and West Africa?
Well, Lerato, you hit on a very taboo subject that hasn't been spoken about, and that is the divergence between the SADC region and the ECOWAS region, and especially if you take out the Anglo-Saxon countries within the ECOWAS region, and you look at the CFA zone, the French-speaking zone, versus the Anglo-Saxon zone, you see a disparity in economic performance, which is somewhat glaring, but unfortunately unspoken of. And as a result, because of the more dynamic activities and the liberal nature of monetary policy and fiscal policy in the Anglo-Saxon zone, it turns out that the Anglo-Saxon zone is a lot more dynamic, and therefore the flows are quite significant, in part because of the relative larger size of the diaspora. Kenya, Ghana, and Nigeria obviously dominating in terms of the size of the diaspora. But clearly we're seeing much more interest in those zones, primarily because a number of countries within those zones have taken upon themselves the responsibility to put in place good governance, put in place good policies, whether under the aegis of the IMF and the World Bank, or because they've been able to benefit from reverse brain drain. I think we just heard that the managing director of the World Bank, Ngozi Iweala, just returned to become finance minister second time around with 100% approbation from the parliament, which is a quite significant reverse brain drain. And so those factors essentially lead us to believe that you're going to see a lot more positive reform in those Anglo-Saxon zones.